Hello, everyone. We have some rather interesting news about the interest rates. Of course, not as interesting as your reserve residents selling out, that's for sure. But at least we are hearing a little good news of the Fed more likely to stop raising the interest rate, hopefully. But does it mean that they totally will cut off all hikes in interest rates? Maybe not, maybe because they'll probably need more time to assess the data, which I will agree because after all, inflation data is always lagging. It could has already been tamed to a certain good extent already, but it will take time for the data to catch up. So well, it's a little bit too early to be seen for as of now. But hopefully, if by end of the year it should start coming down, hopefully we have some news. But then again, nobody can tell the future for sure. It really depends on the data and whether the Fed decides that that data is sufficient to stop our rates increase and maybe even start dropping. From what we know exactly now, it seems that the fixed rate for those of you who did manage to fix, if you do manage to fix at 3 point something, maybe mid threes for 1 year, I think it's good news that you only fix for 1 year. For those who fix like four point something for 2 to 3 years, I had some clients who asked me about that. I really don't think they should have fixed at 4.1, 4.2 for 2, 3 years because it's really, I think it's gonna be a killer. But I did suggest to them, those who hit the advice, good for them. They didn't take that package, but those who still went ahead, I would say, I really don't think that it's gonna stay that high, and I really hope that they are not gonna stay that high. But it seems like for now, fixed rates are already dropping 3.55. Some of the banks are already offering that for 1 to 2 years. Even then, I will still wouldn't suggest locking it in because we are likely gonna foresee rates coming down within the next 1 year. I hope within 1 year from now, we should be back to low threes or maybe even sub three, hopefully. But we'll see how it goes. But this is the good news that we have for today. And of course, if we look at the interest rate cycle, uh, the black one, yeah, of course, this one, as usual, please, we give credit to Mortgage Wise for supplying us with this kind of data, which is quite useful. The black one is the Fed rate, the blue one is the SIBOR, which is gonna be slowly phased out really soon. The orange one, which most of us will be on, will be the 3 month SORA. And it seems that it's going to be stagnating for now. SORA has already started to come down. Usually the orange one tends to lag the blue one. So hopefully this one starts to come down and then this one should follow suit lah. But then again, other than interest rate today, we'll be looking also at affordability. Why we will share a little bit later. And then why are we talking about this today? Because we are looking a little bit more of the macro trend when it comes to the market. Is there resale repercussions or even the new condos repercussions? Let's see how generally it affects. We zoom into those that were within the past 10 years after the TSR came in. Understandably, this is a typical resale condo that has recently rose quite a bit post-COVID. But you can see recently in the past 2 quarters, it has already started to come down, maybe probably because of interest rates. That's why you really have to look at the strength of the fundamentals of that resale property, because a lot of people are saying, oh, the new one is so expensive, the old one is like so much cheaper, blah blah blah, the gap is so big. The gap was big, previously it was big, but post-COVID surge onwards, it's not actually as big as people say that it is anymore. And why are people still buying the new ones? Because of all kinds of reasons. Could be quantum, because the old condos tend to be bigger. They may have more inefficient layout. They are paying overall quantum higher, and not everyone, especially in the newer generations, it's all about space. Some, after all, if you think about it, the facilities doesn't really appeal to them, and they're buying for that kind of lifestyle. Maybe they will want newer facilities because, after all, these are the things that they cannot change, since they can only renovate the unit, but they cannot go to MCSTA. Today, I want a new swimming pool, I want a new playground, I want a new gym. They can't do that. And that is possibly why people still eventually flock to the new one. But which are those resales that are not as fundamentally strong, and they do manage to rise, and in the past 2 to 3 years from the post-COVID madness because of supply shortage, blah blah blah, some of them already started to come down. So not all are already starting to come down. Some are still trying to break new highs, maybe, but of course, most of them are already slowing down. They are not like going at this kind of rates anymore. Very, very unlikely. And even if they do so, I would say maybe it's like 1 year, 1.5 years ago, Tesla stock, those who keep chasing to the moon, the expectation is like this, but end up the expectation, the real thing was like this. Is it gonna be like this for the resale that you may looking at, especially in this current period where interest rates are very, very high compared to the past few years. This is one of the highest. I think I would say highest in the entire decade, the past decade at least. So 4+% is no joke. If you break down, go to the amortization, the causes of buying a full upfront resale is really, really very high. That's why it is understandable that those resales that are not fundamentally very strong, they should come down already because due to the ridiculous surge, especially when it comes to lease that has been eroded quite a little bit. So just for some reference, we draw the past 10 years kind of line, and then these are the parts where interest starts to come up and then starts to die down, and then we look at how the price pattern is. Generally, this whole period between 2018 to 2019, or maybe even start of 2020 before COVID struck, interest rate weren't as high, but they were relatively elevated. And as such, you can see the resale market doesn't seem to be very, very xiong lah. And this is just one contour. Of course, then we zoom out to the macro perspective. This is where the island-wide resale index is. And then we look at the same period of time. Does it correlate to the others period? And let's see. During this period of time where interest rate was previously on an elevated basis, resale was flat, which is understandable because the causes of ownership is high upfront. And then on the other hand, now where we are on record high interest again, maybe at this point, people will be feeling it. People are still driving. That's why the first half of 2022, it was still fast. Even towards the end of 2022, then people started to realize it's really hurting quite a little bit. And as such, already starting to slow down. But the damage has already been done. If you look at the scale of it, the amount of increment, average from 1.2 plus to all the way to almost 1.6. There's a very, very big jump. I would say maybe even 30%. So is this still a big gap as you think it was? I agree previously it was really quite a big gap. But both sides make money. The new side make money, the old side make money. But is this gap going to continue being narrow, or will it still end up being widened? It really depends on a lot of other factors that are more micro than what you see here on such a macro basis. That's why you have to see a lot of times, because there are resales, as I mentioned a lot of times before, there are resales like this, there are some resales like this, there are resales like this, there are resales like this, there are resales like this also. You have all kinds of patterns. That's why this one, from what I see, is more of a more general, because we are looking at how interest rates generally affect the different markets. And as such, resale market over here during that COVID period of time, interest rates were very low, and then as such, the prices were easily going up because people didn't really feel it, and then they didn't expect it to be that high post-COVID due to inflation. But on the other hand, for the new market, right, the same thing during this period of time between 2018 to 2019, interest rates were elevated, but prices were still not as stagnant as the resale ones. Okay, this one is really flat or maybe even slightly negative. This one is still going up, but still at least controlled, because this whole period, I think it was like hitting COVID already. Okay. And then if you see over here, it is still climbing. But if I'm not wrong, it didn't climb as much as the resale, the extent of the resale. And then if you see even till now, this one is still moving. It's the one basically still pulling the market up. And why are people still buying? And there are a lot of factors behind it. So generally, you can see for the new condos, the volume will definitely be affected. That one is, I think, more of a economic on a wider scale basis. But when it comes to the price itself, the PSF, people are actually okay to accept, right? Mostly because if you think about it, whether interest high or low, most of them are on progressive payment. It doesn't hurt them that much. Okay. And then also, not to mention that the new will eventually always have to be higher. It will be funny, and it won't be good for us if the new is like this. It means what? It means that Singapore land is getting less expensive, which means that our land is depreciating. That is not something we want to do. Why is it always going up for the new ones? Because first of all, you have the GLS, which means the developer will bid for it, and then they see the land value, and that's why they bid higher for it. The second one is the en bloc and because they see the land has already appreciated, and that's why they are more willing to bid higher right? And why is it? Because why is it so? Because the economy is doing better. The Singaporean income generally has been going up. It has seemed to be going up for the past 10 years, and it is only natural that the land prices are going up, but not all places. As you can see, some of those are like maybe Lentor and even upcoming. You realize for those who are looking closely at Diamond Grand, the launch date, I just give you a hint. Just the launch date is a little bit before the Jalan Tembusu land plot is being released. So maybe they are a little bit more, I would say, a little bit more cautious. Do they want to lock in the crowd before the land bid comes in? Maybe the land bid comes in lower, then the sentimentals are crap. And then they just want to get rid of the unit first, more of the unit first before the actual reality hits because of the pure influx of supply there. Their side is a little bit worrying, to be honest. And the Lentor side is also another big concern. But other than that, barring all these other factors, the other areas in Singapore, we do not have much new competition fighting each other. Generally, most of them should see their GLS or even en bloc prices going up, which is perfectly normal. But why are those places being flooded? I think government has done it in a very, very specific manner. Why do they do that? They don't explain to us, but I think those who are clear about their intentions, you can see more or less their intentions, you will know lah. And then not to mention that construction costs has also gone up. Developers need to pass on the cost. Their own costs of borrowing also has went up, and that's why they have to pass on the costs to the consumer as well. And one thing that a lot of people do not realize, everyone knows that property prices has gone up. Everyone is saying that it's getting more and more unaffordable, especially on the private side. But we also fail to realize that wages are also going up. So previously, 2021, it was about increase of about 3.9. And then this one increase of about 6.5, which is the highest in a single decade for the most recent decade. And of course, if you take away the inflation of everything, then you have the real wage growth, which is not much, but ultimately all these are also accounted in for with the housing prices. And as long as your wage increase, of course, you may mention that some people gonna lay off, some people blah 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 here and there. Yes, but not everyone who gonna lay off is gonna remain jobless. Quite most of the people that I know gonna lay off, they already found new jobs, and some of them even found a higher paying job. So maybe the layoff was good for them. Some of them got a payout, got a free holiday, and got to a job with a higher pay. Of course, some people may complain, that's not true for everyone. Yes, it's not true for everyone, but to be honest, is the private housing meant for everyone in Singapore? I think that is not the purpose. The private properties in Singapore is not actually meant for everyone. But the problem is that everyone thinks that it's meant for everyone. So that is where expectation needs to meet reality. Because we have HDB for a reason. HDB is meant to be affordable. It's not meant to be speculative. It's meant to stop people from sleeping in the streets. Let's to put it very, very, very bluntly. I think the government has very good planning in such a way that we don't have people sleeping on the streets. We have, but it's not as bad as other countries that we see. Even some of the more first world countries that I've been to, they have significantly more homeless people on the streets than we have in Singapore. Okay, so ultimately, this you realize that the past few cooling measures, every time the MAS or MOF, MND, they all announce their property cooling measures, this line will always come up. Always come up. You see at the start of the first paragraph and the last paragraph, it will always come up. So are there going to be fluctuations? Yes, but the general direction is like this. This is what the government wants. The government doesn't want this because this is going to cause even more people to be homeless or even families going to be wrecked, and this is not their intention. And as long as the prices go like this, it means that the economy is growing, which is reflecting very, very well on the government. And this is what the government wants, and this is what we want as homeowners and fellow citizens of Singapore as well. Okay, and because of this intention that they always reinstate, I think it is only good that we are expecting long-term appreciation potential. But of course, not all properties will be like this. Some of these properties that you've seen over the past 2 years suddenly, oh, like this, are they going to continue like this all the way to the moon? Maybe not. But what the government wants to see is this. Okay, perfectly ideally they want to see this. Of course, this is not going to be ideal. There will be something like this. They want like this, but ultimately the pattern has to follow according to this. And how to ensure that you follow this line is to make sure that you get into something that is fundamentally strong, and then you hedge your risk. If you get into something that is not right, then unfortunately maybe your risk is going to be like this. Imagine you buy here, and then the next 2 quarters you see this, you tell me that you don't get a heart attack. I also I'm definitely not gonna let myself in this kind of situation because I have the necessary knowledge to avoid myself, and I'm definitely not that emotional to get into that kind of scenario. But the problem is a lot of people think that they are rational. But from my interactions with them, they always say, "Hey, I want to buy for investment. My priority is for investment. I don't want to lose money. I want to make money." But ultimately, they will always, most of the time, I would say 80 to 90% of the time, they will end up buying this. Okay, they'll end up buying somewhere around here. Then, if they buy something wrong and then it strikes at the wrong time, things will be like this. Because ultimately, maybe for this kind of older leasehold properties, what happens is maybe the price change should have been like this. But ultimately, remember your lease decays also comes into play. So will it continue being like this? That is a big question mark. But ultimately, property price as a whole in the whole of Singapore should always be like this, because after all, you still got the new guys pulling the trend up, and then the newer BTOs, newer private HDB, and ultimately your lease decay will have to run its due lah. Okay, so it is very important that we understand the government's objective, that they want this, and how to follow this is to make sure you buy into the right kind of properties that have very, very strong fundamentals. And okay, so this is where a lot of people have problems. I would say for those people who always sit on fence, they are waiting for the perfect. In this case, maybe not men or women. But this is just an example. They are waiting for the perfect development, like the number one choice in 2023. One of the best development. How are you gonna know that you're buying into the best development? I think that nobody has the right answer. And no agents or no insider, even the developers, are going to tell you, because they themselves will definitely have to say that, hey, this one is the best development here and there. The most important thing you can do is at least you get into each year the launches, or maybe even whatever choices it is. Maybe you can get into the top 3 or top 5. I think that will do. Maybe because ultimately throughout the whole year you have maybe 30 to 60 launches in a year. Then you just need to make sure you settle for this few. But the problem is everyone wants the champion. You want the champion. But how many people are emotionless and logical enough to make sure they get into the champion? And even among the champion, they want to be the champion among the champion. So this is where a lot of people fail, because obviously we do not have the emotional discipline and also the logical kind of discipline to achieve that kind of objective. But they always think that they do. Okay, so it's like basically those people who are wishy-washy, they do not know what they want. They keep thinking that, oh, I should learn this, I should do that, I should wait for this, I should wait for that. And by the time the action taker has really take on the first step, maybe even settle the second step already, then this one still sitting on the fence. Hey, I missed out that one already. Then, but I think I'm gonna wait for the next one. Yeah, but this one come out, the price not so good, so I'm gonna wait for the next one. 2 to 3 years later, this guy is really move on to step 2, step 3, the next 2 or 3 assets already, but this one is still waiting. Okay, so that is where the expectation needs to meet reality. A lot of people are lacking in that sense. So, for example, during this period of time, 2017, example, even the launches, during this whole period of time, were there winners? And throughout this whole period of time, were there like market fluctuations, cooling measures being thrown? There were easily more than 5 cooling measures being thrown, but were there winners throughout in every each of the year? 2016 we have, 2017 we will have, 2018 we have, 2019 also have. We are starting to see these few because some of these developments are being TOP already. That's why the sub-sales are starting to come in. These guys still not yet because most of them are not completed yet. That's why it is tough to look at the volume because the buyers are not seeing the actual thing. They may not be tend to those sub-sale buyers are most of the time. I got quite a lot of them, by the way. They come to me, ask me, oh, they should buy sub-sale here and there. I say, if you want to buy because you really like it, you want to stay there, by all means, go ahead and buy lah. But definitely, I won't be advising my clients to go for this because most of them are buying for investment, and I don't really serve emotional buyers like I mentioned a lot of times before because it's very hard for me to connect to you. So do me a favor. But on the other hand, I would love to sell to these buyers because they are the ones that help us exit. Okay, so here we haven't really seen the full extent of those developments that have really been launched, but this one not exactly fully yet, but we are starting to see some of them starting to really come to the sub-sale market. And over here, did we see 2016? Did we have developments? Have we also have this one example 2017 we have those like maybe right off the hand we have Martin Modern, Grande Park, what's the other one? Maybe Seaside Residences, all these are, and maybe even Clement Canopy. And then 2018 we have those like what you see, Twinview wasn't launched at a very good price, but they still managed to make money. We still going to make a truckload of money. Then Jitscape, and then Sterling. So all these were launched in 2018. If somebody bought into Sterling, are they going to look at Jscape? Last time I should have bought Jscape. No, man, they are probably making off with their 300 to 500K or maybe even 600K. And then they are running off to happily to the next development. They're not going to look back at, last time I should have bought Whistler. Last time I should have bought Twinview. Last time I should have. Because as long as you settle for one of those winners, it's fine. You don't have to wait for the champion and be among the champion. Even some of them, they want like, average annual yield, I want to be 10+%, that sort of thing. Even for me, if I think I can hit like 7-8%, I think this is superb already. But a lot of people like to have very unrealistic expectations given the fact that they are so emotional. And that's a funny thing that I always observe from the people that I talk with. Some, of course, those they are very logical. I met people, the first day I met them, straight away on the spot, they commit. And these are the kind of people they are very logical, and then they are the kind that always makes the best deal. Because a lot of times, a lot of people like to mistake the fact that, hey, if I take more time to discuss, I'm gonna make a better decision. But no, even for me myself, when I actually from the time that I really think about, okay, maybe it's time for me to settle down into my investment property because some funds has really started to come in. And especially everything you kind of like you feel you at this point maybe I should have this amount of money already. From the time that I think about it to the time that I execute, usually is definitely within a less than a span of 1 month. My previous one, it was within a span of 1 week. My most recent one was within a span of 1.5 weeks because things were were a little bit more complicated. But most people that I talk to, they tend to spend months and months and even years. Last time I've been looking at the market for like past 5 to 10 years, but I couldn't make a move because I couldn't convince myself. And these are the people that tend to forever sit on the fence. But you see, even for people like myself, you don't give yourself too much time to think because you want to ride the wave. I do not expect even for myself. today I buy like this, it's gonna be forever like this. Even for me, I'm okay if the market is like this. And go up like this, go up like this, like this, like this. I don't have to always catch this. It's okay if I'm here because ultimately 3 years is here, ma. We are playing the long term game. Ma. We are not, some people call it a short term, but we are playing generally still a mid term to long term kind of game. We are not playing like last time 10, 15 years ago where people are flipping options. And that's why we have to be, don't think so much, make the right decisions, jump in, and then ride the wave. Because ultimately, you have a lot of homeowners are also on your backs. Later, we'll talk a little bit more about this. And so, back to this 2018, were they winners? I think I already mentioned already. 2019, were they winners? Yes, you have more like Treasure at Tampines, or what's that? Maybe even Avenue South, and then even Dairy Farm. The funny thing is that people are looking down on Dairy Farm here and there. But if you look at the demographics, the funny thing is that quite a lot of people have quite high incomes level over there. But some people like to bash that area because that's because you don't stay in the West. You remember if you go and look at some places, people who stay in the West and generally some of them tend to be quite well off. And then even in the west side, quite some of them, the PSF can be quite high on. But the funny thing is the west, like I always say a lot of times before, the east like to shoot the west like to shoot the east. So, but I always tend to hear people on the west talking a lot louder than the people on the east always talking a lot louder than the west. So honestly, I can't be really bothered. But I'm just finding it a little bit amusing because everyone likes to hear their own perspective rather than really looking at objective data before they make a decision. Okay, so who are the real biggest winners? We are gonna be watching out for them, but we pretty much know who they are, lah. Okay, and upcoming, whether all these the trend for interest rates is gonna be like this, or is it gonna be like this? Eventually it has to come down. Like it can't stay elevated that long, but a lot of companies are gonna die. So eventually when it comes down, will the prices start running? Will the resale prices start running? Which in this case, some people who got into even those they are expensive new ones they will be hitting the resale market because they are selling off the units. Is it time? Is the time right for them to harvest their you already? Or some people are you wait for other people to sell already, then hey, maybe is it time for me to start getting into the market now? And then too bad. Maybe they just got into the market like half a year ago, but people already clear the SSD and already exit. So are you entering where other people are already exiting? That is a timing problem. A lot of people definitely do not have the right foresight to really go and time it properly. And I would say most people would not be able to. But it's fine as long as you get into something that is right. You notice that I always emphasize on the fact that you have to get into something that is right. If you get into something that is wrong, even if you get in at the right timing, it's not gonna help you. You look at the past 5 years, how much the market has moved. But are there properties that has actually been like this? Definitely, So I'm not gonna talk into that again. But when interest rate starts coming down, what will happen to the TDSR? Because now we are facing tighter TDSR, especially a percentage from 3.5% to 4.0 or 4.5. Most of the banks, maybe some of the banks are even assessing a 4.75. And from the 3.5 to 4.75, how much loan can you take? Is a lot lesser. So that means all these are measures that the government are taking for us to protect us from having fire sales. And at the same time, is income also increasing? Because we've seen the wage report just now from the government. I just came out, I think, just last month only, late last month. Because I remember I was at the gym and then looking at the news report saying something like that. And then when I could read about it, quite interesting. And also the fact that there is inflation. So what happened to prices in general? Let me re-emphasize this again. So I don't talk about the same fundamentally strong kind of thing. Okay, so when it comes to interest rates going down back to maybe even 2 point something or 1 point something eventually, maybe not so fast in the next 1 years, but will it come down to 1+% for 3 months SORA or maybe even lower? Maybe, but by then will TDAs also drop? And will if TDSR all these drops, that means will affordability go up again? Okay, remember now we are looking at very limited affordability after all these cooling measures over the past few years. And even then, with all this limited affordability, this one has already. I don't want to mention again whether it's a good buy. I think you go and look at my past two videos before this. But you look at the profile of the buyers, more than 62% combined the age of between 21 to 40 years old. That means these people, these are not very the advanced in age kind of people. They are quite able to afford all these loans. So what does it mean? Does it really mean that the housing are really unaffordable? Or is it that those people who are always screaming and complaining, are they the ones that they find it unaffordable, whereas the actual ones who are able to afford it are quietly buying? Okay, of course, I'm not saying all that they are making noises are not able to afford, but it seems to me that things that we are seeing right now, that how much units are being moved, what kind of buyers, it seems that actually people are quite able to afford, despite all the hoo-ha, the PSF high here and there. There are quite some units already transacting at 2007 plus, or maybe even 28, I can't remember for now. For this particular development, there is 99-year leasehold. So I really don't think that those are good buys anyway, but people are able to pay for that. So ultimately, remember, our country has nearly 90% home ownership rate. Those people who are complaining, wanting, praying that prices are going to drop, that means the person likely don't have property. And if they don't have property, they are complaining, they are fighting against the 90% that already have property, and they are praying and holding on, waiting for prices to go up. Because ultimately, it's always the same. Before you buy, you are praying that the prices come down. After you buy, you look at all my clients all say the same thing. Before they buy, I meet them, wow, prices so expensive. After buy already, wow, thankfully I buy already. Wow, now pray that prices go up. All the same. It's the same. I also feel the same. So are you the Ip Man fighting against all these other guys that already have property? Or think about it, are you Ip Man or this funny guy here? I don't want to use a more good term. Are you this guy over here fighting the whole entire army of homeowners? Which one is more likely? Okay, which one is more similar to your case? Do you really have a strong case of having Singapore prices generally going down? Or is it just some wishful thinking? Okay, that is something that we have to really think about. So when it comes to affordability and interest rates, make sure you do a due diligence and make a move soon, hopefully. Okay, that will be all we have for today. And if you need any help, feel free to text me and I'll see how I can help. See you guys. Bye bye.